Hello everyone and welcome to the NinjaTrader Ecosystem webinar room. My name is Juanita Archuleta and I work here in the NinjaTrader Denver office. We have a very special event for you today with Jared of TradingSUPRA. I would like to mention it is important to understand that there are substantial risks in trading commodity futures contracts. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstance and financial resources. It is possible to lose all funds deposited with your broker and could even incur losses beyond these amounts. Please inquire at the following link for a full copy of the CFTC risk disclosure or for any additional questions you may have. Also, please remember that these training webinars are not a solicitation nor a recommendation, but simply educational in nature. This presentation is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Any brokerage-related questions should be sent directly to the NinjaTrader brokerage using the phone number or the email address that I did place in the room. With new tools added nearly every day, NinjaTrader Ecosystem is home to hundreds of apps and services. You can quickly and easily find tools and services with a simple keyword search. You'll also find information about upcoming webinars and an on-demand video archive to view previous event recordings. Also, if you are active on social media, we do recommend that you follow us on Twitter as well as Facebook for all things NinjaTrader Ecosystem that get updated daily. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure you are on the latest version of NinjaTrader and to pick up a free live data trial, please visit the following link. You're also welcome to lease or purchase NinjaTrader using the following link. And if you are just getting started with NinjaTrader, we offer live training on a daily basis. You can view a schedule of our free weekly webinars using the following link. We are very excited for this unique event in which Jared will uncover two market patterns that repeat every day in the everyday market as well as every time frame. Thank you again for your attendance, and without further ado, it is my pleasure to welcome to the NinjaTrader Ecosystem room, Jared.
Hello everyone, just want to make sure my sound is working as well. And we're currently looking at the NinjaTrader Ecosystem risk of loss disclosure. Thank you, Dan. Thank you, Philip. All right, very good. If you need to reach me, that email, 30days@tradingsupra.com, just want to make sure you have that in case you ever need to reach me. And we can go ahead and get started. And so just a little bit about what I'm going to show you today is I wanted to address the cycle of frustration that I've lived through, and you may have as well. I would take a position, I would feel good about it, and then all of a sudden I'd see something, I'd get out, I might get right back in, I would get stopped out, I'd still like my level, so I'd get back in again. I'd move my stop really close because I didn't want to lose. You know, you're getting antsy. You just want the move to work. It takes too long, in quotes, over 30 seconds. And so I move my stop to near break even. I get stopped out. I give or take a little bit of money there. I then try to settle down. I'd watch the market hover near my level. I'd still like my level, but I'd be frustrated at this point due to the delays, which really was my own impatience. Then I'd see a signal. I would be a little upset and a little ruffled because of maybe the loss, or because now maybe my stop needs to be a little bigger based on what developed. And so I'd say, you know what, I'm just going to sit back, let this trade come to me. I'd refuse to take that signal. And then, unfailingly, within a minute or less, the market would take off. I'd finally see the move I wanted, and I was not a part of it. Does that sound familiar to any of you? It's just yes or no. You can just type that in. Okay. So we've all done it to help you stop that cycle of frustration, that cycle of knowing your level, knowing generally where you want to trade, and then missing it somehow. It's slipping through your fingers. And then also, for those of you looking for an education, I've traded since '97. I became known as Trader about the markets and still am. When I first learned about trading, I talked to basically anyone who would listen. And in so doing, some of my friends and others would start to trade, and they'd ask me innumerable amounts of questions and examples, and can we go over charts, which in those days were printed on paper. It was just at the start of computerized charts and all that, the availability retail. And so anyways, so I enjoyed very much so talking about the markets, looking at the markets, trading the markets, and then helping other people get involved. I thought and still think it's one of the best opportunities available to anyone. Since 2002, I've been a consulting or a primary trader for family investment funds, so just families with money who want to grow their money. I've worked in that capacity since 2009. I've helped day traders. So in particular, kind of the cycle we just talked about, along with other operational sticking points where a lot of day traders get stuck, I've helped folks work through those and improve their operation. And then along the way, obviously, to do this, have created a structured way of viewing the markets through multiple lenses, and then applied those structures to both an intraday setting as well as a multi-day setting. And then within those structures, looking for specific algorithms that I can use to time my entries, reduce my risk, things like that. And so that's a little bit about myself. Now here's what you're going to learn today. This is what we're going to cover. We're going to talk about how to trade 2 recurring patterns. So it's just 2 patterns. And the idea is to settle down your operation, increase your focus, and in so doing, increase your consistency. This will raise your skills and get you closer to a professional level, hopefully. I want to show you how to avoid expensive over trading. If you could, and if you would take a moment in your spare time and go through how many of these, like the scenario we talked about, how much that costs. There's a commission cost, there's the stop loss cost, and then obviously letting the move slip through your fingers is where the cost becomes real, because then your trade operation may start to go backwards because you're missing out on the wins and taking some of the losses. Lastly, I want to show you a new way of trading, a simple, repeatable approach with the aid of powerful algorithm tools. So again, talking about how to reduce your risk, how to increase the quality of your entry timing, of your stop movement timing, of your exits, things like that. And so that's what we'll cover today. Why is it important to know? Number one, most of what we learn online about trading is dead wrong. Decisions are made to use tools from people selling an isolated approach. And yes, I did write this myself, and I know it sounded like I didn't right there, but essentially what I'm trying to communicate is you may have come across some good information, a trade setup per se, and you have found or been shown areas where it works. However, oftentimes these tools are sold by people who are presenting what amounts to an isolated approach. The isolated approach means that you're taking a tactic but not attaching it to a context. And so you're looking for a trade education. You're looking for a way to maximize your efforts so that basically so you make more as you spend your days at your screen. And so you're open to change. You look at systems. You spend money. The result is you have misunderstood losses, which were especially painful for me personally. We'll talk more about that. You get fear, an escalation of fear, because when you take something, you start losing when it's supposed to win. You've seen it win. How come I'm not winning? Maybe there's something wrong with me. You start to almost jump at your own shadow, and then you seek out new change. And so that too is kind of a difficult scenario, and I've been in it, and you may be in it right now. And so, why is this important to you right now? Like I just said, most of the time your strategy or tactic is not oriented to the market. It's taken out of context and just plopped in the middle of who knows what's going on. So why do you need to use a trading model plus algorithms? Because if you view the market first, and then you apply your strategy within the context, you're more often trading in agreement with real-time developments. So you're not taking something that worked over here, over there, over there. You're taking something and saying, what is going on right now and what best matches what's going on right now so that what I'm doing agrees with the market, therefore you're trading in real time. When you do this, you become more synchronized with real-time market pressure. And I think if we think about that for a moment, you can think of any number of examples. What comes to mind immediately is the iPhone, the success of the iPhone. There was real-time market pressure to present something simple to operate and that looked good and was kind of nice to use. The iPhone ticked those boxes overwhelmingly. The pressure was there. They detected it. They have since become, fabulously wealthy off of that single product. And so being in sync with real-time market pressure is where it's at. And that's where we want to trade. This gives you the advantage to be more often correct. And in this business, we're looking to be right now. We're not looking to be right someday. Of course, it doesn't work all the time. That's something that we'll talk more about here in a moment as well. Is this for you? Is what I'm talking about for you? It is if you're just starting out in trading. So if you're new and interested in putting together a trade operation, putting together an approach to trading that will work, that will, number one, not make you go broke, and number two, give you an opening, give you a chance, a fighting chance to profit despite the market's vast size and despite the number of very sophisticated professionals in the market. Can you put together an operation that will keep up in that scenario? And so if you're looking for that, this is for you. If you're feeling like you've traded for a while and you've exhausted all of your ideas, you've exhausted what you thought would work, what you knew did work at one time, then this is for you. Or if you're looking, some of you might be, okay, I'm into day trading, but no, I'm not. Some of you may want to take a trade, put it on Tuesday, let the market develop, let it set up. It's good. Thursday it's working. Friday you take it off, something like that. If you're looking to trade moves that last a few days up to a couple of weeks, then this also is for you. So a little bit about my winding road to today, and it is a tale of ineptitude and resulting woe. More than once, I've had difficulty with my account building up nicely. There was a spell where I just went through this streak where it seemed like I couldn't lose. My account got quite nice. Then I decided if this is working on this small level, why don't I really just ramp this up and cut right to the chase and make a bunch of money really fast. So I did, and I traded over 200 contracts, and then that trade, of course, did not go well. And so I went from a large, comfortable account to one under $2,000 in a matter of a couple of days. I lost my freedom to look at opportunities with optimism. I lost my freedom and comfort to let the trade develop. And really, my biggest conflict during all of that was, do I have any idea what I'm doing? Because I thought, okay, if I'm winning, and then all of a sudden I take this hard hit, I have to look at everything and I have to understand every step. Otherwise, I'm not really comfortable. Much like I wouldn't step into a crane, downtown Dubai, and start steering that around. I would definitely want to have an idea of what I'm doing first. And so I spent a lot of money and a lot of time finding out what didn't work, as well as discovering some things that do. And here's what I was trying to remember earlier, that these strategies do not work every single time. You have to keep at it. And your success is really up to you to take charge and for you to make things happen. I can show you the way, but you need to walk. And that'll be on a couple other slides just as a friendly reminder / reality check. So what I learned from my mistakes, so I traded, I had difficulty, and I have put together now, I have to use a structured framework that I can depend on over and over again. I have to prioritize support and resistance in sync with real-time pressure. And so there were many trades where I had this fantastic level of support. I'd buy it and the market would blow right through it, or it would sit on it for a long time, long enough for me to whittle away a bunch of money getting stopped out like I talked about at the outset. And then eventually once I was exhausted, the market may have taken off, or it didn't take off till the middle of the Asia session when my machine was off and I wasn't trading. And I'd wake up the next day and see a 30-point move in the ES, of which I got 0. And then lastly, I learned I have to leverage order flow. Order flow is simply the market real-time supply of bids, real-time supply of offers. And when you can recognize and synchronize with the market and then synchronize favorable bid-ask scenarios, you're able to time your entry with an advantage. And my personal investment in working in this direction is well over $250,000 in cash. And then this is actually the bigger part here, my personal investment in mental effort. It really challenged to my core my belief in myself, my belief in the markets, my belief, all kinds of beliefs. Along the way, though, there was something inside of me where I could not stop believing that my persistence would pay off. And I refused to believe that just because I had losses, just because I had so many heartbreaking near misses, where I had it and maybe the position was up 50 bucks a contract, so I took it off, and then immediately the market moved multiple points in my favor, just huge moves that I just let go of. Those were heartbreakers, but even though I had those, I never saw it as proof that, hey, I'm just not cut out for this. Hey, I'll never figure this out. Hey, I can't reach success. That just wasn't part of it. I had a few epiphanies along the way. The essence of it is I applied everyday business transaction, what I would think of as common sense. I applied those everyday business transaction ideas, concepts, etc., to screen trading. So I took what we all know, or what we're all familiar with, because here, we're very familiar with business transactions. We partake in them constantly. When you transfer that to the screen, and then you develop a simple and repeatable system based on those principles, you can then find that they play out just as often as all the other transactions in the world. There's not really that much of a difference. So these opportunities come and go and come and go. They repeat most any day of the week. And again, these strategies don't work every single time. It's up to you. I can only show you the way, but each of us, we all need to walk. But obviously, who you spend your time with has a huge impact on your decisions and who you become. So the 3 pillars of super day trading. And this is where I want to tell you how my trading goes now. Now I identify a significant level. This is how the market conveys itself. This is how it communicates its current stature. I identify significant levels. I then prepare those levels within the context of the significant event. So I take a look at what levels matter within a certain scenario. The levels that supposed to matter also convey information. This is where opportunities emerge. They don't always happen, but they often, if they are going to, will emerge at specific areas within a context. And so I recognize an event, I prepare levels inside of that event, and then I can see, is the market actually reacting to itself? Is it actually following through on what it suggested it currently believed? If that does happen, if those levels do garner a response from the market, I engage algorithms. I use automation. The computer can read the market's order flow. I can read it, but the computer can read multiple markets, unlimited really. I cannot simultaneously read multiple markets' order flow. The computer can. I have human error at times, and the computer does what I tell it, usually. And so that's the idea behind using algorithms, using automation, is when you know the sequence that you're looking for, let the computer find it and let the computer execute in milliseconds without error. So those are the pillars of my trade operation. Now, 2 repeatable patterns. Pattern number 1, I call it span of complacency. This is the mood of the market where everyone seems to agree. In the time duration, now this is in a day trading application. This is flexible, and I will show you charts where you can apply it to a multiple day scenario. But during a time duration, a minimum of 1 hour or more. So we're looking at a minimum of an hour. Are there 2 or more matching highs, matching lows? And can you guys see my mouse, or is that, I just want to know if I'm showing you, if I need to point it or not. Rona, welcome, and it's no problem that you're late.
Hey, Jared.
Okay, so you can't see my mouse, so
you actually
I'll
have to
just,
select the pencil, and the red dot will be your pointer.
Okay. Okay. Thank you so much, Juanita. All right, so I see the red dot now. Okay, so now with a minimum duration of 1 hour, 2 or more matching highs or lows. So if we envision this here, the market's trading along, we've got 2 or more matching highs or matching lows. The first low might, let's just refer to lows for a moment. We get a low. At least an hour goes by, if not more, and now the market retests that same low before. That's what I'm talking about here. When we have that, we place what I call the buy line, which is one of the algorithms that I've made. It's a strategy in NT8. I place the buy line $100 above the matching lows that we just located, or if it's a high, the sell line goes $100 below the matching high. And so let's show you what that looks like. And so for that, let me just move a image onto the screen. Screen share. And, sorry. 1 second. It's coming. There we go. And I'll enlarge it. So this worked in our run through. Hopefully it's working now. And actually, okay, so we'll go with this. I'll assume you can see it. And this is from very recently here. We've got matching lows. So I put a 1. This is the first time back. I put a 2. And then with the buy line, this would be the buy line area at the top of this yellow rectangle here. And I've highlighted where the algorithm isolated a favorable buy side entry. And so I'm going to actually switch this. I didn't share the screen. Did I? Sorry, 1 second. I'm going to do it this way instead. Almost
the screen
smooth.
is sharing. It's just you shut the image, so you just need to show your image.
There we go. Okay, thank you, Juanita. Nearly smooth, but not quite. And so here's another instance. We've got highs. This is definitely more than an hour toward the end of the day. Retest right at the same zone, right at the same high. So then simply draw the zone. The sell line would be down here at the bottom edge. And we can see where the algorithm identified a favorable sell side entry. And so let's see if we can go back to all right, so are you looking at my slides again? Sorry, definitely not smooth. Okay, so thank you, Mauro. Okay, so Michael, you asked you would go either way. And so I'll just assume I understand that, but if you want to type in more, you can. If you're looking, again, we want to be oriented. First, we want to recognize the market's current context, then we want to orient ourselves to it. So oriented to the market, it has either a bullish context or a bearish context. using the buy line will only recognize and only initiate a buy side entry. So if you have a buy line but something bearish takes place, it will just simply not trade anything. It won't look for a short. However, you can run simultaneously a buy and a sell line, but that's that would be two different items. A span of urgency, I'm just going to keep moving here. Sorry for the confusion. Span of urgency, this is again oriented to a day trader. And so this too, and I'll show you slides, this too can be applied to a multi-day scenario very easily. But in a day trading scenario, time duration, we look for a span of urgency typically will last about 20 minutes or less. When we have up movement, we place our buy line at the lower third of the span. When we have downward movement, we place our sell line at the upper third of the span. And so I'm going to just try this again. Screen sharing, span of urgency. It looks like we're together looking at a NASDAQ chart. And so here's an example of a span of urgency. The market simply dropped quickly. It stopped. So we just measure looking for the upper third, which I've highlighted here. And then at the upper third, we can see just at the edge of the upper third, the algorithm recognized a bearish development, and there was an opportunity to get short, and we can see the market move positively in this case. And let's just keep on. I'll show you a couple more slides here. That looks very similar. And this is just from earlier today. And so this is not just like the world's most perfect example. In terms of, I'm not plucking these perfect examples like, hey, look at this, look at that. It's like, this happened today. You can't make this up. It did. So we got a span of urgency. The market dropped. Upper third, algorithm identified a short, market reacted. Again, this takes practice. This is not just something that just, you have to make this work yourself. I'm just trying to balance out. Also, I believe earlier today, if you trade Euro Stocks 50, this is it, FESX, DC19 contract, market pulled back. Right near the bottom edge here, the algorithm identified a positive bullish development. So you got a buy line placed. A bullish development takes place in the order flow. The algorithm recognizes it. The strategy places the trade. And we can see the market reacted very nicely in this case. Here we can see a little bit more of a, this is on a daily chart actually. Okay, perfect. Thank you, Mark. Thank you, Eric. Thank you, Dennis. Thank you, Michael. Thank you, David. Awesome. All right. And so trading is tailored to both day and multi-day traders. So if you want to, and that's how I started out back in '97, I used to order charts that were mailed to me. And I would crack into my charts and prepare my trades. And it was actually quite nice in some ways. Obviously now it's much more of a different experience to trade, but I used open, high, low, close bar charts, and I traded multi-day scenarios a lot. And so that's really where I got my start. And then since then, my periodicities have become shorter. But if you're looking for a multi-day scenario with larger scale data view, but with a surprisingly lower risk stop for multi-day trading, this is something that is covered in this, is something that will definitely address your need. And so the question is, what do you want? I mean, we're all independent. I think most traders like to make up their own mind. Do you want to trade within a proven trade model? Yes or no? Do you want to, and this is very important, I worked at a prop firm, and this is really where I appreciated the importance of these next two items. When you take a position at locations that matter, that's where you want to trade. If you're selling, you're providing liquidity to the market. You're giving someone the chance to unload, either stop losing or take their profit. You're providing that liquidity. And so you want to provide it. You want to be a provider where the market's ready to pivot. Same thing on the other end. If you're taking liquidity, if you're the buyer, you want to do so when the market's willing and able to move in your favor. And I learned that both in a good way and in a bad way. I've taken trades where it just can't get any cheaper, and then sat there and watched it and watched it and watched it. And I remember I bought a bunch of call options and watched it and watched it. And guess what happened to those call options? Zero. You know, I've taken futures positions on something that shouldn't be that cheap, and it's gone lower. And so we want to, again, recognize, use a model that recognizes the market's context and then applies strategies and tactics in agreement with that context. If we do that, you consistently raise your skill. That happens. Once you settle down and you organize your approach, your skill has a chance to blossom, has a chance to expand. A couple of charts, just looking at a daily. This is Euro Stoxx 50 on a daily. On May 20th, this is the same idea. It's a span of urgency. On the 20th of May, algorithm recognized an opportunity to get short on the daily chart, so scaled way out. May 23rd, May 31st, hit some profit targets. Let's see here. This is Euro Stoxx 50 as well. This is a span of urgency, and this is untouched, meaning that the market took off again, took off some more, but had never explored this span of urgency. The market then arrived back down to it. Algorithm recognized an opportunity to buy, and the market took off some more, and eventually retested those highs. But you can see that trade started on August 7th and finally retested the prior high, which was a big move, but it took about 6 weeks. And so, just showing a few examples of the larger term trades. So there are hidden costs. They were hidden to me anyways. I didn't, and not hidden like someone was hiding them from me. I just didn't think to look at them. And so, if you take early entries, if you have poor entry location of your entry, if you force trades, which, again, when you get in that cycle of frustration, you can start to overtrade very easily. You feel like you're going to miss out. You feel like you're going to lose. And so you go from being too bold, saying, well, I don't want to miss out, and I'm just going to step in and take it, to too fearful, meaning once you're in, you look at the size of your stop, and it's like, oh, my word, that's $160 per contract with my commission. I can't afford that. And so then you trim your position, you get out, or you only have one when it takes off, something unfavorable. You have early exits. It starts to work a little. You can't forget about all the losses you just took because of your early entries and your poor location. And so now you look at a $50 profit per contract, and that looks absolutely beautiful. And so you take it, and then the market takes off without you. And then the heartbreaker of all, the missed trade. You've worked the level, worked it, spent commissions, spent, and then you miss it anyways. And so that happens when you're guessing at what level to even bother trading. When you know the trade you are looking to make, you feel better and you perform better. When you see what you need to see in order to proceed, you have the chance to then become more aware of the potential rather than fearful. This also enables you to work through tough runs a little more easily because you have a systematized approach. And then lastly, you can recognize there are times where maybe I just need to step back. That happens. Now, we've talked about this generally, but I'm just going to spell out here. The span of complacency, the span of urgency, these are recurring events that happen in all markets and all time frames. And what's happening is the market's implication and validation sequence. And so the market communicates and implies, let's say it springs up, just jumps up, ES, let's say ES, it jumps up 18 points. Well, that communicates bullishness. That implies, hey, there's a bullish scenario that just developed. When we then look at movement linked to those spans, we can see if the market's validating its own implications. So it's implied bullishness. Now it gets to back into this range. Is it reacting or is it ignoring it? Once we recognize how to read the market, we can then start to anticipate moves. And if you want to learn more about this and how to do it yourself personally, I do offer a Trade While You Learn training program. The idea and the goal is to have two things: fewer mistakes and faster good decisions. So you can reduce your costs by stopping the cycle of jumping in too early, stopping out too early, crowding winners too early. You can reduce your costs by 30% or more by using algorithms and by using strategies. You have a scalable approach. And then, of course, once you're filled, you can see and control your orders online. And again, there is a training program available for all of this. So what I've just shown you is a quick look at the exact system I personally use, and I use it to help myself, and I use it to help other traders reach their repeatable success. Now, if you'd like me to help you, I will help show you exactly how to implement everything we've gone over. And so I still like being trading buddy, basically. So here's what to do next if you have interest in trade line, placing your trade line at these levels that we've talked about. If you're interested in learning more about these levels, you can request a free copy of Trade Prep, How to Prepare and Trade Any Market with Your Naked Eye. The item is available in NinjaTrader 8. And so that's what you can do right now. And for the first 20 people who schedule before the end of the webinar, obviously you can download both the copy of Trade Prep, and the strategy. But you can also schedule a free conversation about how to make real progress in your next 30 days, which is really what excites me the most, is not someday. I didn't have someday. Someday is too far. I'm talking about right now. That's how I felt when I was struggling, when I was trying my best and then trying again still harder. And, instead of doing what, might call normal things, going out, hanging, going to a baseball game or whatever, staying home and reading books, or staring at my charts and looking at where did I make this choice? Where did I make that choice? And weighing all the different scenarios. And that takes time. It takes a lot of effort. And in the meantime, you're missing out on something. So if you want to trim that back and want to improve your situation, we can have a free conversation about what you're currently doing, what you want to do, what you want to accomplish, and how I can be of assistance toward that end. To reach me, email is on the right, or you can just old-fashioned, like I told you, I started with paper charts, printed. You can just pick up the phone. And so if you want to download, send a request. Oops. And please ask any questions at this point. Typo, sorry. There we go. Okay. Or you're welcome to just pick up the phone and call. Michael V., you asked, what is the algorithm measuring? Good question. The algorithm is measuring real-time market pressure Awesome. Thank you for that. So real time, and yes, it's a fully working chin. Um, Real time market pressure. And so when you're looking at a bullish scenario, and then inside of that scenario, you're looking at a level where if it's going to be bullish, the market has to convey that in that level. Otherwise, it's going to ignore the whole scenario, that kind of thing. So you wait for the market to kind of get itself in a position where it's either telling the truth or not telling the truth. It's implying something. It's either going to validate it or invalidate it. And so once it's in that position and in that location, the algorithm then monitors real-time pressure. And so if you're looking at a bullish scenario, the algorithm that you would apply would be looking for buy-side pressure. And that can take all sorts of forms. It can be an absence of sell-side pressure. It can be an overwhelming scenario of buy-side pressure. It can be all kinds of mixtures between that. But essentially, the basic answer is the algorithm is measuring real-time pressure and answering the question in real time. Does this agree with a buy side entry, or does the market in real time with real bids and real asks, does it agree with buy side pressure? Is it producing an opening for the market to spring upward? And then the converse is true for the downside, sell side. Chin asked, is the download a fully working version? Yes, it is. And so you're able to just see it on your own machine. And then obviously there's a host of videos that you can watch. But yes. And so if you send your request, that's how you can get your download. Any other questions? I didn't want to run over. And I believe we're just about filled out. And so yes, it only works in NT8. And so exactly what you get in the download is you get a fully operational strategy that works in NinjaTrader 8. And it's been a real pleasure, Dan, David, Matt, PK, Chin, Michael, and many others. And so if you have any additional questions, looks like we have another minute or so. Thank you, Dennis. I appreciate it. And so the costs, Dan, it's on a subscription basis, and so it just depends. But it's approximately $200 a month. Greg, yes, I have made market analyzer tools. PK, please quickly review what? Mark, I'm glad you liked it. I appreciate it. Thank you so much, Rona. Thank you, Carl. Hey, Carl. I think I know you. So for your system, let me find you, Greg. What'd you say? Greg, market analyzer for your system. Yes. Please quickly review the strat. Okay, there we go. And so Chin, yes, you're able to buy and sell, and that's included in the functionality. Yes, for both. Yes, Chin. Yes, Carlos. The algo does work on all futures markets. You can use it if you're looking at micro. So let's say you want to try this, but you want to risk full value points. You can use it in micro. You can use it in, I use it across time zones. So if you want to trade something at the, Hong Kong exchange, for example, or just any time, day or night, yes. Yes, Kirk, those are different. What you saw at the website, those are for different products. Sir, if you want to, sir, you asked, can I trade manually? I'm curious to know more as far as what you would want. If you want a something to pop up on the screen that shows you, hey, this is an area where you have an opening. And that's just my terminology. I mean, when I think of order flow and I think, okay, if you're looking to buy and the offer thins out, gets smaller, gets smaller, that I call an opening to buy, because the fewer sellers there are in the way, the higher the price has to go to find liquidity, to find sellers. And so that's what I mean when I say, if you see, if you're looking for an indication where the algorithm can communicate to you and say, I think there's, or there is an opening here, then yes, you could get that as well, and then you could manually execute that. And so Juanita just sent me a note. We will need to wrap up. And so, yes, I will, Juanita. I will tell everyone, thank you very much for attending. Thank you for your questions. Thank you for all of your input. If I missed your
Thanks,
question,
Jared.
you can send it to
We
30
definitely
days
want to
at
give you a
TradingSUPRA.
special thank you for such a great presentation. And for everyone who was able to join us, you will be receiving a on-demand recording of today's event, so keep an eye out for that email. NinjaTrader Ecosystem is pleased to sponsor these weekly events as a value-added service for our clients. If you do find value in them, we do hope that you will attend them on a regular basis. We would like to remind you the information provided in this was that of TradingSUPRAs and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we do appreciate the time that you spend with us. Enjoy the rest of your day, and we hope to see you all in future webinars. Happy trading from everyone here at NinjaTrader. Thank you again, Jared. Thank you, everyone who attended. Have a wonderful day.
Thanks, everyone.